In this presentation, we will continue on with our S Corporation Comprehensive Problem Part 13. We're going to have an M1 adjustment related to a bad debt. This will be input into tax software, Lacert tax software, Lacert owned by Intuit, the owners of QuickBooks. Other tax software will be similar in terms of the data input and the generation of tax forms with them. If you would like to put this directly into the actual tax forms, we will provide those. Or you can go to the IRS website to get them at irs.gov, irs.gov. Here we are on the 1120S. I'm going to go to page 4 just to note that we are in balance. So that's going to be our starting point. It looks like we are in balance here. So those two numbers are the same. We're in balance. We're going to go back to our forms, or back to Excel now. Within Excel, we're going to be concentrating on the bad debt. So the bad debt expense. Now what we're going to say is that we're using an allowance method, and we're going to say that we're only allowed to deduct the amount that was actually written off in this time period rather than the allowance method, which is going to be an estimate. So if you have questions about the allowance method, you can go, we have a course on accounts receivable and the allowance and the direct write-off method. So if you have questions about those, you can take a look at those. But in essence, we're going to have an M1 adjustment related to that item. So if we scroll over to the side, I'm going to say, okay, what's the amount of that adjustment? I'm going to scroll down and see within our detail, amount of accounts receivable recorded as uncollectible during the year. So of the 8,000, 6,000 of it was basically amounts that we determined to be uncollectible, became uncollectible in the current year. So we're going to say that for taxes, we can deduct the 6,000, and therefore 2,000 of it is going to be, we're not going to be deducting here, and that's going to be the M1 adjustment. So if I go back over here, I'm sorry, I thought it was 8,000. We're going to get 6,000, so the 4,000 of it then is going to be the amount that it's going to be not deductible. We're going to have an M1 adjustment of the 4,000 then. So if I go back to the tax return, what's that going to look like here? The adjustment then is going to be an adjustment to page 1 where we had the bad debt expense. Here's the bad debt expense here. We would expect that to go down. The other side being an M1 adjustment. If I go to page 5, then we're considering the M1 adjustments, and we're going to add an M1 adjustment here. So it's going to be similar to the travel and entertainment because it's going to be something that's going to be going the same way. So I'm going to add it here. I'm going to jump to that data input screen. See if I can jump to the data input screen there. And I'm going to put it into non-deductible expenses. And I'm going to go into other non-deductible expenses. And then I'm going to close this back out. I'm going to call this bad debt expense. And I'm going to say, what was it? 4,000. And okay, back to the forms. And this is an example of if you have some kind of expense that's not kind of the typical items that are going to be generated. You'll recall that the entertainment or the meals was basically given to us. The system kind of did that. It has a nice little location for it here. We had the tax exempt interest has its own basically spot. We had to go and enter that, but notice it has its own spot here. The depreciation was basically done for us after we enter that kind of complex depreciation schedule. If you have other type of M1 adjustments, then you got to determine where it belongs, which way is the M1 going, and then you can put it into that other M1 adjustment. So here we're going to put it here for the 4,000. Does that throw us off in terms of the balance sheet or the Schedule L? Scrolling down, it does. Why? Because the other side should be on page 1 of the 1120S. So page 1 of the 1120S, we're looking at the bad debt expense here at the 10,000. Let's jump to that, right click and jump. There's the 10,000. I'm going to represent the M1 by putting underneath it M1. And that'll show me the journal entry. I'm going to say, here's the detail. There's the 10,000. We're M1ing 4,000 of it. Not 40, but 4. So negative 4,000. And that should leave us with the 6,000. So if I go back up to the forms then, there's the 6,000. I would expect that then to put us back in balance. So I'm going to say, let's go back to page 4. Does that put us back in balance? It does. So now let's see if we can reflect this in Excel to see what the journal entry looks like. So I'm going to go back to page 1. I need to write it down to 6,000. So I'm going to go back over here for the taxes. I need to write that down to 6,000 for the taxes. So I'm going to say this is a tax journal entry. I'm going to need to credit that number. So the bad debt's going to go down with a credit. The debit is going to be an M1 type of adjustment. So we're going to go into the bad debt M1 adjustment. The amount is going to be for 4,000 and debit and credit. And notice you might want to put little notes with your journal entries down below if I was to put notes in the journal entry, so if I was going to say like to write this down to bad debt expense, then you'd put the note down here possibly, and then you might want to color the note or make it like a different color. Maybe you can, make it red so it's a note, or possibly italicize it or something like that, so you can see it's not part of the journal entry, and you could put the notes down below. So I'm not gonna do that now because it does kind of muddy things up. But the more details you can put into it, the better for it. So if you put notes after each journal entry to kind of explain what you're doing, that could be useful to yourself and to others doing this. And note, when I say it's useful to others do it, and you shouldn't do these shortcuts and all that kind of stuff, I do shortcuts, and I I often don't put notes, and I should. But so these are best practices, and to do all those kind of details, I think they save time in the long run. I'm not saying I do them all the time either. So, but in any case, we're going to go to the M1. So here's the M1 adjustment and the bad debt expense. So the bad debt expense is up top. We're in P27 equals, and that's going to bring this down to 6,000. And then we're going to go to the M1 adjustment down below. So the M1 adjustment, and that's going to be the 4,000. All right, so there we have it. And so that's going to bring, notice our book income is everything. And then this, of course, stops. So this is the income from the sales revenue line down to the Schedule K and M1 adjustments. So now let's see if we reconcile these income numbers on the tax return. I would expect page 1 of the 1040 or the 1120S to be 69,510. So let's go back over here. There's the 69,510. There's the 6,000. That looks good. Page 3 then starts at the 69,510. That looks good. Page 4 ends with 79,510. So if I go back to our details, 79,510 ties out. The difference between those two numbers here is the blue items there, which are going to be all the Schedule K adjustments. Then if we go to the schedule, well, let's see if we're in balance. So we are in balance. This number matches that number. Looks good. Page 5, we have the beginning number 85,710 to the 79,510. So we've got here the beginning number 85,710 to the 79,510. Going back to the forms. So everything looks good there, and the adjustment we had was that 4,000. So that looks good here. Let's go back to the forms. I'm going to go ahead and save this. Then I'm going to go into our open items. I'm going to say, all right, we did that one. So it looks like the only other open item is going to be dealing with that cost of goods sold calculation.